Company. Next up, we have CordovaCann. It trades on the OTCQB under the symbol LVRLF. CordovaCann is a Canadian company focused on building a leading diversified cannabis products business across multiple jurisdictions, including Canada and the US. Today with us, we have Taz Turner, CordovaCann CEO. Welcome, Taz.
Thanks so much, Hannah. Really appreciate it.
All right, excited for your presentation. Take it away whenever you're ready.
Thanks so much. So as you said, I'm the CEO of CordovaCann. Appreciate everyone listening here. I first will get into a little bit about the cannabis industry, and then a bit more about CordovaCann as it is attacking this industry. So the next slide here, I think I'm good now. Sorry about that. So why cannabis? So the cannabis industry is still very nascent and fragmented. The legal cannabis market is expected to grow nearly 25% annually over the next 5 years worldwide, and in the U.S. in that same time frame, the market is projected to double. Just last year in 2020, the U.S. market grew 46%, and we continue to expect really strong growth here in the coming years. Can you go to the next slide, please? I don't know how to go to the next slide. I don't know what's going on here. So why now? The cannabis industry is going through a massive growth phase, and we expect deregulation not only in the U.S. but also across the world. In the U.S. in particular, we expect some banking reform, and we expect continued market acceptance across the consumer base, and that will drive some significant M&A. 37 states in the U.S. have already voted to legalize cannabis in some way, shape, or form. The majority overwhelmingly approves the legalization of cannabis, and we expect federal legalization will help drive growth both here and abroad. Next slide. So here are the key cannabis investment themes that we've brought up, and we'll get into how CordovaCann is growing against these themes here shortly. So right now, retailers are mostly mom and pop outfits. There are some smaller chains, but it does, as the chains grow, we expect them to have more leverage in the value chain. We at Starbuds do have a chain of stores of 6 growing to 15. And so we will, with each additional store that we open, we do expect more leverage in controlling those brands and controlling the distribution of those brands. The next theme is vertical integration, reduces the operational risk of the business. And by vertical integration, I mean cultivation, manufacturing, and retail. And it not only reduces risk, but increases the margins of the overall business. We feel that excess capacity should be better used in terms of for white label manufacturing. Right now, there's a number of nascent cannabis operators that do have brands that we feel like their best efforts shouldn't be at manufacturing those brands, but rather getting the brand awareness out there. And then lastly, we're very early on in brand recognition. Brand recognition is driven by niche markets, whether they be part of one state or whether they be in one particular state or just a part of one state. And so we think that over time, brands will be like any other CPG market, and we expect the brand awareness in cannabis to increase multiple fold over the coming years. Next slide, please. So the executive summary on Cordova. We are a vertically integrated or aspiring vertically integrated business in both Canada and the US. Right now, through our acquisition of Starbuds International in April of last year, we bought some 6 retail chains, which we've since grown. And that brand was built off of a platform, Starbuds, that was created in the United States by an operator named Brian Rudin. We have 6 stores currently, as I said, another 9 more in queue. So we expect to have 15 open by sometime around the end of this summer. We believe that we can open 75 or more stores in Canada over the next few years, and the returns on capital in this business have been are extremely compelling, and we have continued to show that we can generate strong returns with each store opening. Right now, the first 5 stores are profitable, generating over $10 million a year with 35% gross margins. We just opened our 6th store just this past week, and it is off to a good start, and we expect that to follow suit of the other stores. In the U.S., we own a cultivation facility in Oregon and a manufacturing facility in Washington. There are ample opportunities to grow those facilities, as well as attach complementary businesses to those in those markets, as well as move into other U.S. markets. Right now, the capacity in those U.S. markets are for 3,400 pounds of flower and for over 8,000 liters of distillate production, and that capacity will be growing substantially in the coming quarters and years. So, sorry, just to back up one slide, if you would. Sorry, can go forward. I'm sorry. All right, sorry, apologize. So the board and management team, I think the takeaway here is that we as the management and board own a significant chunk of the company and are aligned with our investors. And so, we're expecting to continue to drive, strong returns on capital, and we own the stock just along with every investor. I will point out that we do not have a complicated capital structure. Every single share is the same, and it's a common share. So we own the same exact security that you do. Next slide. So just to get into some themes a little bit deeper, the theme I mentioned on the retail dispensaries, we target strong returns both organically and inorganically as we will grow our retail presence. We will expand our retail presence in the United States and Canada. As I mentioned, we have very attractive store economics where stores are profitable pretty much out of the gate. And we've targeted a payback of less than a year and currently are getting paybacks of less than 6 months. Our stores, for the most part, stand in secondary and tertiary markets where there's less competition. And we try to become a part of the fabric of the community where we have a lot of locals coming in. Certainly in some of our markets are a bit more touristy, so we do want to attract that business. But the base of that store is usually the local community. And if you're one of only a few in those communities, it sets up for a pretty strong returns. There's potential to acquire successful retailers both in the U.S. and Canada. We're talking to new potential opportunities every day, and so you'll see us move into buying one-off operators or potentially a group of 2 or 3 as we move through the coming quarters and years. And the retailers right now have a lot of leverage in the market because, like I said, the brands are nascent and very fragmented. So we will continue to leverage that business model and be able to, as I mentioned later on in the presentation, help proliferate some of these brands that we think are attractive and need to be, have greater brand awareness across geographies. Next slide. So the next theme is white label manufacturing. Right now, there are many small brand operators, and for the most part, those brands manufacture their own products, which we don't think has, really is the appropriate way to scale a business over time. We think it'll migrate just like any other CPG business, where the manufacturing of these products will be outsourced. And we feel like Cordova is in a strong position to be that outsourced manufacturer in the markets that we're in now, Oregon and Washington, but also in additional markets as we expand specifically to the Western United States, probably originally, and then beyond from there. We do believe in our conversations with brands that we can help them expand their awareness, and that they do want to partner with a few operators instead of a lot of different manufacturing operators to get into multiple states across the country. Next slide, please. And so, yeah, in the last theme, cannabis brands. I spoke a little bit about this before, but you know, there's a number of niche brands with cult-like followings. We feel like we can take some of those followings of those brands and move them into additional markets. Not the least of which is Canada, where there isn't a big presence of U.S. brands. And so, given our cross-border assets, we believe that we have the opportunity to be able to bring IP over the border so that we can proliferate brands more efficiently than perhaps other operators. Next slide, please. So getting into the StarBuds platform a bit more. As I mentioned before, StarBuds is a very successful operator in the United States. We bought in our acquisition of StarBuds International the intellectual property to the StarBuds brand in Canada. It is federal IP. Brian Rudin, the CEO of the U.S. operation, does sit as a special advisor to CordovaCann, and really we've been able to leverage the expertise, the SOPs, and the best practices of StarBuds US into a very successful launch of StarBuds Canada, and we'll continue to access that platform in order to grow our business. So a slide just on store performance, just showing the monthly retail sales. Some things to point out here: our 6th store, which isn't on this slide, opened last week on the 6th of March. It takes approximately 60 days for a store to ramp to a somewhat steady state, although we are seeing kind of growth in a number of our stores continually, week over week, month over month. On a combined basis, the stores are averaging about 30,000 a day right now, and obviously that'll grow with the opening of each additional store. You'll notice in January and February that the sales were down a bit. Actually, they performed way better than we thought they would. In January and February, a majority of our stores were in total lockdown for the entirety of those months. So sales were down, you know, we think approximately 8 to 10% off of where they would have been otherwise, although we don't know because we don't have a comp because the stores weren't open a year ago. But the stores would have been down from the December timeframe, given the fact that December is a strong month given the holidays. The other point that I'll point out here is that a number of our stores, or a couple of our stores, are in locations where we think they'll have much stronger performance in the summer months because there are more touristy destinations, and so we'll have both the local population and the tourists to be able to drive into our stores. Next slide, please. So just a slide on our retail store economics. We're targeting $2.5 million in annual revenue per store. You'll see the EBITDA target is about $450,000 per store. These are our initial targets. We expected a payback of less than a year. That's come to be significantly less than that, and hopefully that will continue. And as we open additional stores, we will update these targets. But for right now, we're keeping with these targets as we've laid out here. Next slide, please. So the retail store design for our StarBuds stores is clean and simple. A lot of them aren't very large footprints. We've found out that a majority of our customers, say 85–90%, know what they want to buy before they go into the store. So we want to be able to provide them those products on an efficient basis. And you know, our hope is obviously to upsell them an additional product or to allow them to try an additional brand. But for the most part, we know that our customers know what they want, and we kind of want an experience of get in and get out and have a knowledgeable staff so that if they do want to try something new, they can talk to somebody and try something new. But we do not plan on, you know, opening up, you know, the next Apple store. We feel like this is not a industry where people are coming in and browsing for an hour and a half before they purchase. This is kind of in and out, and they know what they want. Next slide, please. So just a little bit on our retail opportunities in Canada. In Ontario and in Manitoba, we operate under a JV structure. In Ontario, we own 60.5% of that JV, and in Manitoba, we own 51%. In Ontario, we have 4 stores open and expect to open another 2 in the coming months. And in Manitoba, we have 1 store open and expect to open another 2 in the coming months as well. We think there's an opportunity in these markets, because they are a bit more nascent, to accelerate our growth, and we expect to add stores into the queue in these markets, in addition to these 4 that we have listed here. Next slide, please. So in Western Canada, we own 100% of the operations. In Alberta, we opened our first store earlier last week, March 6th, and expect to open the additional 4 over the coming 6 months. 2 of those stores are relatively ready to open, given that they were part of the asset acquisition of Starbuds International, and they've been, for the most part, built out. The other 2 we do need to build out. So that's why the difference in time frame here. But we expect all 4 to be open, pretty much in the summer. And then in British Columbia, we are still in the regulatory process of getting approved there. We expect to be approved here in the next couple of months, and we'll be opening our first store in Kelowna, which we're very excited about, and we'll look to expand in that market after we get our footing with that initial store. Next slide, please. So just an overview on the Canadian market. It was recreationally approved in 2018. There's still a lot of growth left. As I mentioned, I think on the last slide, in Ontario and Manitoba, those slides are have been a bit slower to adopt and roll out on the retail side of the business. And that's also why just the difference in the provinces on how they've rolled out retail, why we focused on retail initially in Canada. We just think there's a lot more opportunity there over the next few years, given the fact that in Canada it started really with cultivation and then moved into manufacturing. So a lot of that, the table was set, so to speak, in that market prior to recreational legalization. And so we do think we'll move into those, perhaps move into that part of the value chain over time. But that's why we've initially focused on retail in Canada, which is a different strategy than we've taken in the U.S. The other point that I should point out here in Canada is that because it was the first major market to legalize recreational cannabis, they do have a very vibrant export market, which we expect to grow substantially over the coming years. And we will look to perhaps move into that market over time, although that's not a near-term focus. We do think that may be an opportunity over time, especially as we try to drive our white label business and proliferate brands. Next slide, please. Just moving over to the U.S. market. In our Oregon operation, we own a 6-acre facility outside of Portland in a town called CANNABIS. When we got involved in 2018, they were growing less than 1,000 square feet of canopy. We've put capital to grow that to 10,000 square feet of canopy, and we'll be turning on that expanded capacity in the coming months. The license just transferred to us at Cordova in November, and so you'll see us ramping our cultivation substantially here over the course of 2021, and we hope to also add a manufacturing facility on site, which we're currently in the queue for to get that license approved. Right now in Oregon, the capacity of that facility is 3,400 pounds of flower, and once the manufacturing facility is set up initially, we expect to do at least 3,000 liters of distillate out of there. Moving on to the next slide. In Washington, we just closed on the acquisition of a company called Extraction Technologies, which is a manufacturer out of Washington, just earlier this month. A facility in Bremerton, outside of Seattle. It's about 11,000 square feet. They have a number of white label manufacturing contracts, which we hope to expand in the coming months. And the initial focus will be on crude distillates and concentrates, but we'll move into edibles over time. And we'll be doing both white label and branded products out of this facility in short order and expanding the capacity on this facility substantially. Right now, the current capacity is about 5,000 liters of distillate production. Next slide, please. And just a little bit about the Pacific Northwest, Washington and Oregon in particular. I think a number of different outlets, and I hear this all the time, these two states get a bit of a bad rap. We actually love these markets because they're stable. Some of them like to call them, overcrowded or commoditized. I think we're very, very far from that. I call them developed markets, and the reason they're developed is because they have a much more developed consumer base and a much more developed product base. And so, that has allowed the pricing to be very stable for us. In fact, since we got involved in 2018, we've seen, stable to up pricing over the last 3 years. And, really, we've seen no different in Washington and expect that to be the same there. In fact, in the last 2 years, there's been significant growth, not only because of just demand, where that last bullet point there, these two markets grew nearly 40% in 2020, but also because the outdoor crops have suffered from some natural disasters in fires and freezes. And so that's driven up the price of greenhouse and indoor flower and the manufactured products. And so we expect, these markets to continue to be strong and are very excited about them. And, we'll move into additional markets outside of these two in the coming months or coming quarters as well. Next slide, please. And so lastly, just to sum it all up, here's a number of potential growth opportunities. But as we said, we have, expect to have 15 stores in Canada by the end of the summer or around the end of the summer. We expect that there's an opportunity to own 75 or more stores across Canada. The company is looking at acquiring additional stores in that market and will most definitely continue to organically grow beyond that 15. Hopefully we'll add a few more in the queue before year end. We also are looking at potentially acquiring a manufacturing license in Canada to help go after our white label manufacturing thesis in that market, but also to help distribute brands both within Canada and to help drive US brands up into Canada in our retail stores and outside of our retail presence. In Oregon, in the US, we've planted flags in Oregon and Washington already. You'll see us both organically expand those operations, but also perhaps by complementary businesses to expand in those states. We also will look to plant flags in other markets in the US, most likely near term in the Western United States, but we'll also look to move east over time as the opportunities present themselves. And as we continue to look for strong returns on capital, we'll grow our white label base of clients both in the US and hopefully in Canada over time. And then, we think our cross-border positions us well to help brands move IP across the border from US to Canada, but also across state lines, and to help brands proliferate, across North America. So with that, I will wrap it and turn the call over and see if there are any questions. Thank you so much.
Thank you, Taz. Yes, we are coming upon the time to end. We do have some questions for you, but we're going to send them directly to you so you can answer them at your time and convenience. But this was a really great presentation, and we look forward to following all of your progress in the future. So thank you so much.
Thank you, Anna. Appreciate the time.
All right.